Welcome to CentroNia's 2022 Early Childhood Educator Tax Guidance session. Today, we'll be discussing how to account for supplemental payments from the DC Early Childhood Educator Pay Equity Fund in your 2022 tax return filing. I'd like to kick off this session with a quick overview of CentroNia. We're a nonprofit organization providing early learning and wraparound services at 4 DC sites and 1 in Maryland, all of which serve predominantly low-income immigrant families. Most of you who work at other DC centers and schools are probably familiar with us through the work of CentroNia Institute and particularly through our Child Development Associate, or CDA, training and scholarship program, which provides English, Spanish, and Amharic language support for initial endorsements and renewals. Let's start with good news. The Office of the State Superintendent of Education saw that early childhood teachers weren't paid enough, and they wanted to address that need in a quick and easy way. After considering the most expedient way to get these funds directly to you, they settled on working with AidKit to process supplemental payments, which began in May of 2022. They split this into 3 different timeframes. So the first one was a lump sum payment for the fiscal year 2022. For fiscal year 2023, they began to do this in quarterly installments. So, many of you received payments in December 2022 and can expect subsequent payments in March, June, and December of 2023. In fiscal year 2024, you'll receive your supplemental payments through your employer. This means that the funds will be treated the same as your regular salary and reflected on the IRS tax form you're probably most familiar with, the W-2. The amount of money that you were awarded through the ECE Pay Equity Fund can vary depending on your staff type, which refers to your qualifications and responsibilities. It can also vary depending on your employment status, which refers to whether you are a full-time or part-time employee at the school or child development center where you work. If you have any questions regarding your participation in the ECE Pay Equity Fund, consult their website for more information. Since payments were delivered to you as non-salary, supplemental payments, they are not included on the W-2 you received from your employer. Instead, they are accounted for through the 1099 that you received from AidKit. So let's talk about the amounts. Depending on your role and employment conditions, you were probably awarded either $10,000 or $14,000. The amount on the 1099 you received, however, might look a little different due to a difference in tax calendars. When we say fiscal year, we're referring to the DC fiscal year, which runs from October through September. Calendar year refers to the normal January through December year. Your W-2s and 1099s cover a calendar year, but the district's fiscal year straddles 2 calendar years. For this reason, you might notice that the amount on the 1099 you receive from AidKit doesn't necessarily reflect the amount you were told you will receive over the fiscal year. Any payments you receive after December 2022 will be reflected next year when you're filing your 2023 tax return. All right, so let's talk a little bit about taxes. Your tax return is like a summary of your income and any expenses you had to take on in order to obtain that income. When you receive additional income, you're responsible for paying taxes on that. You might not feel the impact of taxes as much on your regular salary because your employer uses withholdings. This means that they deduct some of your paycheck for taxes and you're paying as you go. If the withholdings were lower than the taxes owed, you might have to pay some additional taxes. If the withholdings exceed the amount you owe, you might get a tax refund. The payments you received from AidKit, however, didn't have any withholdings, which means instead of paying as you go, you need to pay the taxes on that income now. ECE Pay Equity Fund payments received in 2022 and reflected on your 1099 must be accounted for in your 2023 tax return. Now that you've received a 1099, the question is, what do we do with it? The recommendation here would be to use the Schedule C tax form for individuals with self-income. This might seem strange since your participation in the program depended on your being employed at a DC school or center, but since the payments weren't delivered as part of your salary, the Schedule C tax form is the appropriate choice in this particular case. When do you need to pay your taxes? Usually you file your tax return before or by April 18 and the return establishes how much you need to pay or how much you expect to receive as a tax refund. In theory, however, we actually pay taxes throughout the year through withholdings from our paychecks. So, from January through December, you're making payments on the income you're earning, and those payments are the withholdings that you see on your W-2. This pay-as-you-go method decreases the impact on your finances when you file your tax return in April of the following year. So you have between the end of December and April to compile your information and see how much you actually paid through that year, how much you should have paid, and the difference between those two. That's how you arrive at the amount you will pay in taxes or receive as a refund in April. There is an automatic extension that you can request that will give you up to October to file your tax return. That is, you have more time to declare through your tax forms how much you owe the IRS or how much the IRS owes you. It does not mean that you have an extension to pay. If you file later, say, in May or June rather than April, and it turns out that you will receive a refund, and there's no harm done, you will receive that refund. But if you file in May or June and then it turns out that you owe additional state or federal taxes, these are taxes that were due by April 18. And from April 18, those taxes accumulate interest. Another important point to note is that your tax return is different from your immigration status. Whether we are citizens or green card holders or any other immigration status, if we reside in the country, then we are all taxpayers. Our residency in DC or Virginia or Maryland and in the United States confers certain rights and certain obligations on us all. The U.S. has a progressive tax rate. What does this mean? Progressive taxation means that the higher your income, the higher the tax percentage that you have to pay. Let's say, for example, that you have a 10% rate and you make $10,000, so that 10% comes to $1,000. Now let's look at this particular chart. When you make $25,000 per year, your tax rate is 10.4. And as we move along, let's say to an income of $41,000, then the tax rate adjusts. It's no longer 10.4. Now it's 11%, so your overall tax liability is higher. So, while payments from the ECE Pay Equity Fund increase your income, they also affect your tax rate. To calculate your taxes, you first need all your income and expense information. The IRS forms that you receive reflect your sources of income. Here are some of the most common forms. The W-2 is the main form that your employer will use to provide you with information on your earnings and withholdings. This time around, you have received a 1099 NEC that reflects income that was not a part of your standard employment compensation. That is, it summarizes what you received in 2022 from the ECE Pay Equity Fund. You might receive other forms as well, such as the 1099 INT, which your bank might prepare if you've earned interest income, which perhaps has gone up for you due to rising inflation. If you earn dividends from investments or receive Social Security benefits, those would involve different forms as well. We're going to delve more into the 1099 NEC because this is the form that you receive from AidKit. Here is a sample 1099 NEC. You will notice a dollar amount in the box. This amount is the compensation received. This additional income will affect the tax rate that you are going to pay. It could take you, for example, from 10.4% to 11% or to 11.2% or to 11.5%, whatever that percentage base it is. The payment will also diminish your chances of getting a refund. Why is this? Well, usually when you get a payment through your employer will hold some of your salary to put towards taxes. That's why sometimes we're surprised when we see less money on our pay stub than we expected when we negotiate our salary. In the particular case of the extra payments you received from AidKit, deductions were not made, and so now it's up to you to calculate what those deductions would have been and include those deductions in the amount of tax that you are paying this year. So in a way, the amount you received is not the amount that you keep for yourself. Just as you might have different sources of income, you have different types of expenses. Some of these expenses, such as the ones listed here, might reduce your tax liability. For example, you might have work-related expenses that you must incur in order to obtain income, and considering some of these expenses when preparing your tax return might reduce the amount of taxes you ultimately owe. You've probably heard about itemized deductions and standard deductions. Standard deductions cover basics like your age and filing status. Itemized deductions consider other factors, such as real estate taxes or mortgage expenses or charitable contributions that when combined may be higher than your standard deductions. In those cases, you want to go into an itemized deduction, but in most cases, the standard deductions are higher. When you or your tax preparer do your calculations, you can choose which approach gives you the most benefit and apply that approach. Other potential deductions would be educational deductions. This would consider student loan interest or teacher educational expenses or other related vocational expenses. Those are things that you can deduct. Deductions decrease your income and allow you to calculate the net income on which you will pay taxes. Credits, on the other hand, allow you to reduce the amount of taxes you pay on that income. Those include a child tax credit, the dependent care credit, the earned income tax credits, and the educational credits. Now it's worth remembering what we discussed about the progressive tax rate, because one consequence of this is that some of these credits phase out as you earn more income. The idea is that as we become more wealthy, we don't need the same level of help from the government to support ourselves. Thus, the types of amount of deductions and credits that you can take depend on your specific circumstances and vary from individual to individual. Let's delve a little more into the tax return preparation process. Consider the sample 1099 we saw earlier, which had a revenue of $12,500. How might we reduce the tax impact of that 1099? Well, the Schedule C form that we complete allows us to consider all of the valid expenses that we incur to obtain that income. Think about a factory. You can earn money selling products from the factory, but you have to buy things to make the product and produce that income. So, this is the same sort of thing. You've had that 1099 that is your revenue or your income, but in order to obtain that income, you had to spend dollars somewhere else. So the tax law allows you to reduce the amount of income that you will pay taxes on by considering what you had to spend. So what type of things can you include there? Well, if you have to buy classroom materials and these were not reimbursed by your employer, then that's a valid expense that you can use. Another common deduction would be non-commuter transportation. This doesn't include your regular commute between your house and your place of work, but it can include transportation between sites. For example, if you work at one site in the morning and at a different site in the afternoon, and your employer didn't reimburse you for that transport between sites, that's an expense deduction that you may take. Another example would be if your role requires you to prepare materials and you had to buy materials like paper or clips, or you had to have internet in your house or buy specific equipment to perform those tasks. These are general examples, as the deductions you specifically can claim will depend on your individual circumstances and whether expenses were or were not reimbursed by your employer. Remember to save your receipts and to have them on hand when preparing your taxes so that you can check whether it is a valid deduction that you could take based on your own situation. Overall, what you were trying to do is determine the net amount that you should pay taxes on rather than paying taxes on the entire amount received. Let's see what resources are available to you as you work through the 2022 tax return process. Really, you have three options going forward. So after understanding a little bit more about the tax return process, you might want to file your own taxes by using a free IRS tool. Another option, and one I'd recommend, would be to make use of free tax preparation assistance available in your community. There's a program from the IRS that is called VITA, which has a team of individuals who can actually prepare taxes for free. You can get information from them regarding availability and schedule an appointment. Our own organization, CentroNia, is actually hosting the VITA program at one of our centers, so we have volunteers that are working here at CentroNia preparing taxes. Again, you need to schedule that appointment in advance because space is limited. Finally, we have a tax consultation option. So if you have some questions you'd like to ask about the tax return filing process, you can book a 15-minute call with one of us through this tool. We won't prepare the taxes for you, but we can provide additional information, guidance, and resources to help you through this process. I know I shared a lot of links with you, but you can find them all in one place on our resource page, bit.ly/ECE tax guidance. Let's review some sample cases that might help you navigate your particular tax situation. Our first case is someone who filed their 2022 taxes without realizing that they would be receiving a 1099. The simple answer is that you have to amend your taxes. Just because you didn't include that amount in your tax filing doesn't mean that you didn't receive that income. Since you did earn it, you have to declare that income in your taxes. The Restatement 1040X form is what you would use to amend your tax filing. Generally, if you've already filed a 1040 but have since realized that it requires correction, you would use the 1040X to make the changes. You can file an amendment for up to 3 years back, so if there's an error in your taxes for the years 2020, 2021, or 2022, you still have the ability to amend the filings and report correctly. The IRS, on the other hand, have a statute of limitations that stretches 7 years. If the IRS, for example, finds an error that you made 7 years ago, they can still request payment due. This is why it's so important for you to save your receipts and to keep them for 7 years. Remember, payment is due by the filing deadline in April, with interest accruing from April moving forward. Our next sample case involves what to do if you are filing your taxes and don't have enough money to pay the taxes you owe by April 18th. You can actually enter into a payment plan with the IRS, and if you pay the IRS within the next 180 days, there is no fee associated with that payment plan. If you take longer to pay, there is a fee associated, which is around $70. Now, let's say that you're filing your federal taxes and you're also filing your DC, Virginia, or Maryland taxes. So you may owe taxes at both the federal and state levels. In the case of DC, DC is a bit more expensive when it comes to interest. So if you have to pay both, we recommend that you pay DC first and then put the remainder towards the federal taxes that you owe to the IRS. One excellent option to consider, and one that we recommend, is to put your March 2023 ECE Pay Equity Fund payment towards your 2022 taxes. So if you received $10,000 last year, you'll receive a $2,500 check as your March quarterly payment. If you received $14,000 last year, I believe the amount will be $3,500. So use that check to reduce your liability. The second thing that we recommend is to adjust your W-4 salary retention with your employer. Remember what we discussed before about your employer withholding some of your salary to go towards your state and federal taxes. You can adjust the percentage that is withheld. This will lower the amount you receive on your pay stub, that is to say, your available cash, but on the positive side, you'll actually be paying as you go. The next case we're going to discuss is that of someone who is filing taxes for the first time. Well, the first thing is if you don't have a social security number, you're going to have to request a taxpayer identification number. Let's remember what we covered earlier regarding the difference between our tax status and our immigration status. Perhaps you don't have a social security number, but you can use that individual taxpayer identification number or ITIN to pay your taxes. The ITIN is issued by the IRS and can eventually be replaced by Social Security when you get one. Above all, don't feel afraid to file your tax return. The first sample case we discussed covered what to do if you received your 1099 late, while this final case is about if you never received it at all. This is actually not uncommon. 1099s are usually mailed, and they can get lost along the way or sent to an outdated address. Even if your 1099 does not arrive, you still have the same tax liability. If you receive funds, it's your responsibility to pay the taxes on that, whether you receive the 1099 or not. Of course, if you didn't receive it, you can always contact the sender, which in this case would be AidKit, and request a copy of that receipt. When you file your tax return, you'll need the 1099 for the calculations. You won't actually send a copy of the 1099 to the IRS, but you'll want to save a copy as part of your backup documentation. I hope that these sample cases were helpful. Visit our resource page to see the links shared throughout this video and access additional resources. One of the options you'll see on the resource page is a link to CN Tax Advice, where you can book a free one-on-one consultation with our team. You can also ask questions via email at taxguidance@centronia.org.